You said we could have one last stand. A lot of people might be gripping to that hope, Mike, that we could get another rally here. Mike, what would you need to see? And what's the chances that it's going to happen?
Yeah, well, look, I mean, we called the rally in the fall from October to December based on the following, based on the view that we thought China was going to be reopening, which it did. That would help global growth story, and rates were probably peaking, and they did. They came back down, but now that's sort of reversed, right? Rates are shooting back up because the Fed has more work to do on inflation. And I would argue that China story, I think some of your guests were just saying, we agree with this. This is a China story. This is not a global growth story. So yes, it's very good for China equities and maybe some Asian economies that can gear off of that, but not so much the U.S. stock market, which isn't that geared to China growth. So in order for the market, for valuations to go up further, which is what we're talking about, right? In order for stocks to go higher, it has to be valuation driven because the earnings are going to be flat at best in terms of the trajectory. That means interest rates have to come back down, and the dollar has to weaken again substantially, which it's been stronger here more recently as the Fed's been it's signaling they're going to tighten further. So without those two tailwinds, I think it's almost impossible to argue for higher valuations, which means it's very difficult to argue for higher stock prices.